All right, so today I'll be teaching you guys how to know the difference between a trend retracement and a trend reversal, because I see a lot of people trying to trade a particular setup as a reversal, not understanding that it is actually just a retracement, and they end up losing money. Okay, but however, before I go into all of that, you guys remember this Euro USD I shared with you guys on Monday. I told you guys that Euro USD is going to cook for us this week. I'm hopeful that, this is the cooking about to happen. All right. So core CPI was shifted to next week because NFP was also shifted to this week. So we have NFP this Friday. Core CPI was supposed to come out today, but it was shifted to next week. NFP is going to come up on Friday. So the market is going to be pricing. If you don't know what is the market pricing, I've taught it somewhere in this channel. I think the title of the video is how I trade core CPI, or how I trade NFP, one of them. But it's on this channel. Go and watch so you understand what I mean by market pricing. All right. But moving on, let me quickly tell you guys, give you guys the difference between a retracement and a trend reversal. And then we'll come back to this. We'll also go to AUD USD also. I believe AUD USD is also cooking. NZD USD also is also going to cook very soon. Then we'll analyze some JPY pairs, then see if it's time to get back to JPY. Remember, I showed you guys that JPY basket, has been on the upside, and because of the change in leadership of Japan, we might be seeing the market might be down. That's JPY basket, as generally might be down for a little while before we get at least some form of strength on the JPY side. Okay, but I'll come back to all of that, and I'll tell you guys some currency pairs that you should also look out for, like the USD card, and also AUD card. I think, yeah, AUD card, that's it. All right, so I'll tell you guys what I'm looking out for on some of these pairs. But for now, let's go to the drawing board. Let me show you guys the difference, and then we'll come back to the charts. Okay, so first of all, understand that there are three types of trend. I've taught this many times, but let me just do a quick reversal, a quick recap on that. Okay, so there are three types of trend. We have what we call, first of all, a strong trend. A strong trend looks like this. This is that kind of trend where there is little or no reversal. Sorry, my pen is misbehaving. Something like this. Now we call this a strong trend. Now a strong trend has very, very little reversals, and it's good if you're going to be swinging on a long trend, on a strong trend. It makes a lot of sense. So this is strong. This is a strong trend. Now we also have what we call a healthy trend. In fact, before we go to healthy trend, let's look at weak trend first of all. Now this is what we call a weak trend. A weak trend looks like this. Now this is a trend where the support and resistance is not really, the difference is not much. It looks something like this. Now this is what we call a weak trend. A weak trend because the retracement is almost looking like it's a reversal. Now we now have what we call a healthy trend. Now a healthy trend looks like this. This is what we call a healthy trend. A healthy trend does a reversal, more like the previous support becomes resistance kind of thing. You understand? We call this a healthy trend. These are the three types of trend we have. Now this trend, this one is good when you are going to hold, like enter a trade and hold. This usually happens as a reaction to news events. Let's say a news event comes out, NFP, core CPI. The market usually follows up with a very strong trend if the news is actually very positive for that particular currency. Now a weak trend is a trend that has little or no fundamentals to it. It's most likely, most of the time, it's just technicals, because there's no news actually moving the market, or this can be also as a result of two strong currencies. This usually happens something like Euro GBP. Euro GBP usually has very, very weak trends. GBP. Sometimes also you can also have very strong trends also, but most of the time, in my opinion though, I stand to be corrected again, but 60% or 70% of the time, Euro GBP trends are usually very, very weak, in my opinion. Okay, but they can be strong, like I mentioned. But the best kind of trends to actually trade are healthy trends. Now, what are healthy trends? Healthy trends are trends that have retracement. If you see that the previous support is almost as if it's obeying the law of support turns resistance and resistance turns support, something like that. Now, this type of trend for me is usually the best. It's the easiest to predict and the easiest to make money from. Okay, now I'm going to be doing this example now. What I'm going to be teaching, I'll be using healthy trends just so it makes it easy to understand. So how do you know the difference now between a retracement and a total reversal? So let's start with retracement. So for instance, now this is what a retracement looks like. You see a trend like this. You have, for instance, two. Okay, let me do it. Okay, good. So you have two lows and two highs consistently. Now this has formed a trend. I usually refer to this as reference high and reference low. So for you to confirm a direction of a market from a trend perspective, let's say you're using a higher time frame, let's say you're looking at a daily time frame. For instance, now on a daily time frame, you're not going too far back on the chart. You just want to look at what market is currently presenting, I mean, like in the past 1 week or 2 weeks or 3 weeks or maybe 1 month. Okay, so let's say you take cognizance of two strong highs and two strong lows called reference highs and reference lows, reference high or low. Okay, now taking into cognizance this, now these two most previous ones now, which is this one here and this one here, these two now, this now becomes your only reference for a change of structure. So for instance, now if the market does something like this, like this, like this, like this, now looking at this, now let me draw this line. Looking at this market also has two lows, two highs and two lows, but we are saying that the previous high that was formed here is not yet broken. So these two lows that the market has formed here is sort of invalid because they've not broken the two previous reference highs or reference lows. In this case now, this is simply a total, everything happening here, everything inside here is a retracement, is not a reversal. Now this is one way to know a retracement. This is one. Now let me show you the second way to actually know a retracement before we now go into reversals. So for instance, let's say we still have this. Okay, now this is where you use a Fibonacci tool. Now this is where we use a Fibonacci tool. Now remember that Fibonacci tool, for instance, now you're going to be drawing from swing high to swing low, so it will look something like this, something like this. Okay, Fibonacci looks like this, and then you have here 0, we have here 100, have here 100, then you have 23.6. this is usually the most obvious levels that people use. 23.6, we have 38.2, we have 50%, and then we have 61.8%. Now in my opinion, like I said, this is my opinion, all right, in my opinion and in my almost 10 years of experience in trading right now, I've learned that most times when a market gets to a 50% retracement level on a Fibonacci and doesn't show any signs of reversal, whether it is just maybe a small wick, even if it's just a bounce, even if it's just a little, at least let there be some form of reaction. If there is no reaction at all on a 50% Fibonacci level and the market goes down to a 61.8% level and also shows no sign of reversal, not even a bounce, nothing of sort, and just starts, let's say the market starts, maybe showing candles just below the 61.8%, most of the time, more often than not, this trend is about to actually change. This is most likely a reversal planning to happen. How I usually spot this is very easy. So let's say, for instance, I want to trend, follow the trend, and I'm looking for a trend continuation of some sort. And let's say the market comes to the 38.2 level or 50% level, for instance. So we're here. Most times, when the market gives me the first reaction here, let's say we get very long bullish candle here, and then the market down decides to come down again to 61.8 and gives another bullish candle, this for me is a sign that a retracement, this is actually just a retracement. Most likely the market might bounce from a 61.8% level before going. Now, this is not my best entry, but is one of them. Personally, of course, I obviously love liquidity sweeps, in which case, if the market comes down here, sweeps the liquidity above this level, gives me my liquidity sweep pattern, which is usually my best entry, is good also, okay? And this also, like I said, it's this in this case now is still a retracement, is not a total reversal. Now, how do you now know reversals? Let's now talk about reversals. Now, this is what a reversal looks like. You have two reference highs, two reference lows, two reference high, two reference lows, and then the market comes down. And remember, this is our reference high. This is reference high, sorry. This is a reference low, these two levels here, okay? And then you see the market actually break below this level. This is the first start. This is first step. The market breaking below this level is still not a reversal. Please pay attention to what I'm teaching you. This thing has messed me up big time. Market breaking below this support only is not a what people say, something like they call it breakout. They will now start entering sell. They will start selling from here. This is the worst mistake that you can make. The market just giving only one break of structure to the downside is not a change of trend. How do you confirm the trend has actually changed and the market has actually reversed? Is when the market comes back into this level and does not go above this level. If the market comes here and goes above this level again, this confirms that this was just a retracement, despite the fact that it broke a previous support. Do you get the difference now? So how do we know that this is a retracement? A retracement has happened when the market actually comes back into this level, and instead of breaking above this level here, it actually gives us a new resistance that actually now breaks below that new support that was formed here. This now becomes a reversal. So you can decide to start looking, maybe even use Fibonacci to look for a trade somewhere at about this level to continue the trend going, or you can even wait for a liquidity sweep above this level and then follow the trend all the way down again for a sell. Now, this is just the basic difference. Now, it's a bit more in-depth than this, but I might not go beyond this level now. You get what I'm saying? Because, I mean, this is free, right? So, but this is, I hope this actually makes sense. If what I'm teaching makes sense and you learn something, please type something in the comment section. I would love to read that, all right? And so that said, back to the chart, let's look at Euro USD, and so we'll be out of here. So Euro USD, like I said, the market is pricing in for the week in preparation for NFP. So on Euro USD, I'm obviously looking for a sell, but I'm not going to be entering yet. I'll be waiting for a liquidity sweep somewhere around this level. The market is already giving me signs, not as strong as I would like, but then it's giving me signs that the market will sweep liquidity inside of this zone and then give me an entry somewhere here. Okay, so that's what I'm expecting. So if I see this happen, I'll send you guys a setup on the Telegram channel. Joining the Telegram channel is free. The link is on the description of this video. Go and join that Telegram channel. You'll learn a lot and you get a lot of free signals. I don't trade very strong. I'm strong, like I don't trade like every single day, but every single time I send a signal, be sure that I'm almost as 80% certain that it's going to go well. So join the Telegram channel, enjoy a lot. AUD/USD also, I'm still expecting the market come back to this level, somewhere here, somewhere about this level, to give us a break to the downside or even this level. Okay, so that's still my expectations. Now let's look at USD CAD. Let's see what we're expecting on USD CAD. Now, if you notice or if you remember DXY, I think I shared DXY with you guys on Monday. I told you guys that DXY is giving us strong higher highs and higher lows, even on the daily time frame perspective, which is an indicator that, I mean, the US dollar looks like it's actually going to be gaining strength very soon. So currency like USD CAD, we might see keep rallying up you know, very well. Okay, so on USD card right now, there are two opportunities I'm seeing, but I'll just give you guys the second one, which I feel like is the most obvious, because I'm seeing, you know, some entry signs even somewhere around this level. I'm seeing that the market might even, you know, just push up. This looks like a very good setup, but just not my A kind of setup though. So I will just leave this out for now and then focus on the second level, which is here, okay, which is this level here. So two things I'm seeing here. Number one, obvious, I mean, there's a fair value gap here. It's very strong, very clear, you know, I mean, it's clear to the blind. So I'm seeing that the market might come here, sweep liquidity, you know, mitigate this and then give us a push to the upside. That might happen, you know, maybe after the NFP or even before the NFP possibly. Then of course this zone also, this zone is another zone that the market might actually want to come sweep liquidity instead of that first zone. So I mean, keep your eyes peeled on USD card. This would most likely happen within this week. All right, now NZD also, okay, I think the entry is a bit still too far on NZD. Now Euro CHF, if you guys remember Euro CHF, I shared Euro CHF on Monday also with you. The market didn't get to our entry before going down. I was expecting the market to at least come into this level, but the market didn't go, you know, come up to that level and then went down from there. So let's look at AUD card. Now AUD card, let's start with the daily time frame. So I'll show you guys exactly what I'm expecting. I remember when the market gave us this second impulse, like I mentioned that AUD card is most likely going to start a fall, which is what I'm still expecting to happen on AUD card. At least I'm expecting that this market would maybe get to somewhere to this level before we get the market give us some like real action. Okay, so on the 4 hour time frame, this is what I'm looking at. So if you see right here, obviously we have a fair value gap. All this level is a fair value gap that I think the market is coming to do a mitigation, and I'm obviously going to be looking for some form of liquidity sweep pattern inside this level that will inform me to, you know, actually sell. So that's why I said I'll show you guys, because it might happen today or it might not, but if it does, I will share you guys the signal on the Telegram group, you know, for free. Okay, so if this sets up and looks very good, I'll share the signal and entry on the Telegram group for you guys. So make sure you're on the Telegram group and make sure you also give this video a thumbs up. All right, if you learned anything, let me know that I learned something in the comment section. Make sure you subscribe to this channel. I bring these values every single time. And if you love to register for a mentorship program, the registration is still ongoing. So send us a DM and let's get you registered. The WhatsApp number to reach me and my team is also in the description. All right, so that's it. Ciao. Have a wonderful time trading. Wish you guys all the best.